Yo, what's good, boys? Judging by today's title, we're gonna be going over fair value gaps, how I use them, when to use them, everything, right? So, boom. First, let's go over here and look at our definition, right? Fair value gap is an imbalance in price action. It's created when price displaces rapidly and leaves an imbalance in between three candles. So, it's a three candlestick pattern. Okay, so let's go over here real quick. It is a three candlestick pattern. I'm assuming most of you guys know what fair value gaps are, but just in case, we're gonna give a little example. Boom. Alright. And she's Spanish. Alright, let's give it a little wick. Whatever. Boom. 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 Alright. So we have three downside candles, right? The fair value gap is an imbalance, an inefficiency in price. So we see price rapidly displace right here. Boom, three candles. Let's just say this is the 4 hour time frame. We're on the 4 hour, right? Our fair value gap is the gap in between, in the middle of these three candles, from this bottom wick to this top wick. Okay, so first candle, this bottom wick, and this top wick, right? And it would obviously be the same to the upside, right? Boom, boom. Oh my God, I'm rushing this shit. My fault. All right, pretend there's wicks here. Boom, we're going up. This is our fair value gap right here. But most of us should know that it's the gap in between the bottom of this candle, the top of this candle, right? Including the wick. But how can we use this to make money? How can we use this to clarify our entries and our exits? Because the way it should work, a fair value gap, it's an imbalance in price. So price is rapidly shifting to the downside. In order to continue this momentum to the downside, we have to balance price out to then push it down, right? Everything has to be balanced out. That's how we take our trades. Because we know if we come down and create an imbalance, most likely we'll have to come back up, fill this imbalance, and then start to get rejections out of it, right? This will be like an ideal. God damn, how do you shut this shit off? Thank you. So this will be an ideal respection, right? This is respecting a fair value gap. Respection. That's respecting a fair value gap. Create the imbalance. We come up. We fill it, and then we would want to enter somewhere around here, like after we get that momentum out of the fair value gap. So this is where we could find entries. We could also catch it to the upside. So let's just say, let me delete this, right? Let's just say we have liquidity somewhere down here, right? Let's just say we have liquidity right here. Right? We came down, we created a low right here, and then boom, right? We came up. This is our chart. We create a low, we come up, and then boom. We see price rip to the downside and we sweep out this low. In this case, it may not be as easy to say, okay, I want to look for puts here because we just swept a low, right? We just took a low out, and just like my last video about liquidity, we know there's liquidity here. We grabbed a low, so now I could be looking for a move to the upside, right? And the way I can use a fair value gap to the upside is from an inversion, right? We see a sweep liquidity, we get a move up, right? Boom, let's say we respect it, get a little move down, boom, boom, price chops, and then boom, we get a candle we get a candle closure above this fair value gap. We just disrespected a fair value gap, right? This fair value gap is supposed to balance price out to push it lower. But if we see we close above it, this is just invalidating sell side selling pressure, right? Price is coming down. We should come up, balance price out, and keep going. But I now see we swept liquidity and now we inverse the fair value gap. So you could use downside fair value gaps to the downside, and you could use them also to the upside as an inversion, right? So we have fair value gaps. You could use them to get respected or inversed. So that's just something about fair value gaps. I really fair value gaps is it's top three confluence, right? I use them every single day. Liquidity and fair value gaps. This will make you money in the market, guys. Being able to identify lows, identify liquidity sweep like this, boom, low, swap liquidity, inversion fair value gap, and then all we would wait for is, let's say, within most of the time, within an inversion, we create a new, for example, here we have a bearish fair value gap. We inverse it. Most of the time, we create a new bullish fair value gap on the way up. So, boom, we inverse this, most likely create another fair value gap somewhere right here. Now, we double down. We inverse this fair value gap, created a new one. Now, I'm waiting for price to come back down, fill it, and then break structure to the upside. And then my entry would be around here, right? So this is how we use fair value gaps, right? We watched liquidity, we watched the inversion, we watched the bearish get inverse, the bullish get respected after a low got swept. Now that is enough confluence for me to say, hey, I'm going short, or I'm going long. I'm sorry, I'm going long. So that is pretty much a little rundown on fair value gaps. Let's get into some live examples now. I'm gonna leave this here just because we could always come back to it, right? So let's look at Friday's price action. Now Friday, I read price like the back of my hand on Friday. I nailed almost every single move. I called it out in my Discord, right? At 9:15, I went live for pre-market analysis, and I said I'm looking for this, and this, X, Y, and Z to occur, and all of it happened, and it played out perfectly. Let me show you exactly what I was looking at and how I was able to make. I think I made like $100 to $200 in like 20 minutes on Friday just from this, right? So I'm always starting off on the high time frames, guys. As soon as you guys get into the market in the morning, you want to look at the high time frames immediately. So I was on the weekly. Actually, I was on Qs. I took this trade on Qs. Damn. All right, let me just delete everything. Boom, boom, boom. I was on Qs. I took this trade. I was not on SPY. I took this downside right here. I caught, where is it? This was Friday. Called this move. Where was it? Oh, I'm tripping. I'm on the 4 hour. Yeah, I pretty much cut these moves down right on the hourly. Boom. But the reason I was able to do that is because I started on the weekly on the high time frame and I saw this. Boom. On the weekly time frame, which holds a lot of power, I saw there was a weekly fair value gap right here. Right? I scaled down to the daily and the 4 hour to see which gives me the most confluences, right? So I see, okay, we're in a weekly fair value gap. I saw we're respecting it. We could come up out of it, right? We cannot close above it, right? So an inversion, let me clarify this, right? We have our fair value gap. An inversion would be if this candle came up and closed above it. Let's just say this is the candle, right? If we came up and we closed above the fair value gap with closure, that is an inversion, right? This is not. We could wick it. We could come up, fill it, come back down. That is completely fine and still respecting it. So I see we are respecting a weekly fair value gap. I come into the 4 hour. Now I'm on the 4 hour time frame, right? This was our wick right here. You have to keep time frames in mind, right? Because on the weekly, it's a wick in a weekly fair value gap. On this, it looks like we're closing above it, right? So always keep your time frames in mind. On the weekly, we wicked it. On the 4 hour, we're getting legs down. So I'm seeing we're in a weekly fair value gap and we're rejecting, right? So now what am I looking for? I'm looking for liquidity and I'm looking for imbalances. What did I say, right? So this was Thursday's high. This was a 4 hour high from Thursday. Let's go to the hourly, right? This is a 4 hour high. Let me actually real quick mark out market open for Friday. Boom, boom, boom. Vertical line. Let's go to 15-minute. Boom. So Friday open right here. So I'm gonna walk you through exactly what I saw. Pre-market, I've marked out this high. I wanted to see this high get swept because we're in a weekly fair value gap. On top of the weekly fair value gap, there is a 4-hour fair value gap right here. So in my eyes, I see a 4-hour fair value gap, and price opened up right here, right? Price opened up right at this level. So we didn't even sweep this high yet. So I'm seeing a 4-hour high, a 4-hour imbalance, and we're rejecting out of a weekly fair value gap to the downside. I wanted to see this 4-hour high get swept, this 4-hour imbalance get respected, because these are my bearish confluences. I'm bearish for the day. My bias is to the downside. I want to see price continue to the downside. So I'm looking for clues or little puzzle pieces to support my thesis, right? I see a high get swept, supports my thesis. I see a 4-hour fair value gap, get respected, supports my thesis, right? To the downside, my bias. Now let's go to the 1 hour. What did I see on the 1 hour? I saw an hourly fair value gap right here. So how can I use that to support my bias? Because this fair value gap is bullish, right? This is a bullish fair value gap, right? 3 candles, and I took the middle, right? From this bottom wick to this top wick. This is our bullish fair value gap, right? I wanted to see this get inversed, right? I was waiting for an inversion. So now we have a weekly fair value gap being respected, a 4-hour high being swept into a 4-hour fair value gap. We have an hourly fair value gap getting inverse. So these are all telling me, yo, price wants to go down. We are bearish, right? So I mark all these things out, and then I just wait. I mark out the 4-hour fair value gap. I mark out the hourly fair value gap, and I mark out my high, and I just wait. And I say, I want to see price sweep this, fill this, come down, inverse this, and that's going to be all my high time frame biases to then go short. And then to find my entry, I scale down to the 5 minute, and I would look for the exact same thing: more fair value gaps, more highs, right? Price is fractal. Everything that happens on the 4-hour and the 1 hour and the 15 minute also occurs on the 5 minute, the 3 minute, the 2 minute, the 1 minute, the 15 second, the 1 second. It constantly respects fair value gaps. It constantly sweeps highs, and it constantly generates liquidity on every time frame, guys. Price is fractal. So now I'm on the 5 minute. What was a good entry, right? 4-hour fair value gap, respected, broke through, came down. I took my entry up here, right? Price was telling me we wanted to go down. After all of these fair value gaps and inversions, I saw another entry on this bearish fair value gap up here, right? We came out of the 4-hour, created this fair value gap, and we never tapped back into it. We got close right here. And I know my charts look messy. There's so much happening, but just bear with me, right? They each have meaning. The green is the 4-hour fair value gap. The red is the 1-hour inversion, which we inversed on this candle, right? But I'm just showing you how price is fractal. We have another fair value gap. What did price do? Look at this. This wick right here came up, filled this imbalance to then push price lower, because we have to fill imbalances and balance price out. So this was another entry in this fair value gap. You see it, we filled it. Even if you catch it down here and you catch the closure of it, you could say we just swept out an internal high, right? Not only did we fill this fair value gap, we have a high right here we swept. After all of these other high time frame biases, right? Everything has to start connecting on all time frames. 4-hour, 1 hour, 15 minute, right? So this was a beautiful example of fair value gaps and how we could use them, right? We have, like I said, the weekly, the 4-hour, and the hourly, right? No matter if it's bullish or bearish, you can use it to help decipher where price wants to go, whether it's an inversion or respecting it. Okay, so let's just try to find some other examples. Let me clear this. Boom. All right, let's stay on the 4-hour real quick, because the 4-hour is very helpful. You can see on the high time frame, right? The 4-hour holds the most structure. That's why I say it's helpful, right? It's like the 5 and the 2 minute. Like, look at this. This is just, what is this telling you? This is a million different candles, right? It's too confusing to look at. Stay on the 4-hour, right? So boom, we have a bunch of highs here, right? And we see price open up above these highs. Strong closure, or strong legs up after opening above highs, right? So we're most likely breaking through this range, right? we could see this is like a general range of resistance, right? We can call it our supply, right? Our supply zone. Wicks, wicks, rejections, wicks, wicks, wicks. Boom. We open up above here, right? That's the first thing I'm looking at in the morning on the high time frame. We just broke through major resistance. And I don't trade support and resistance, but it's also very good to keep in mind and understand. So after I see that, then I start looking for my strategy confluences. What do we have? Fair value gap. This is technically all our fair value gap. What does price do? Comes down, fills it. Also, our support then becomes resistance, right? This is our high right here. Boom. Our support, we break through it, we come back, retest it as resistance. Once again, I don't trade that, but it's good to know. Filling this fair value, and then scale down. Now what do we wait for? Boom. We're trying to catch the upside, right? We see this, we break above highs, we fill a fair value gap. What else can we look for? Okay, well, we have an hourly fair value gap right here. This got inversed and then pulled back to and respected. Look, 1, 2, 3 times we filled that fair value gap without closing beneath it. That's an entry, right? Where else do we do it? Look at this. Boom. Price makes a big extension down, big leg down. Did we create a fair value gap? Yep, we created one. Let's mark it out. Boom. Let's mark it out. What did we do? Come down. Price came up. Where did price come up? Right to the fair value gap. So we can use these as entries. Once you mark them out and you see, okay, we just broke to the downside crazy, filled our fair value gap, and now we're getting more legs down. Let's look at the 5-minute. If I could find it. Shit. What day was this? I hate this shit. They got, bro. I swear, TradingView has got to do something about that. I swear, it's so hard to when you're switching time frames. But we can see on the 5-minute, we know this is our hourly fair value gap. We see price come up, rip up, and most people see this and say, "Oh, we're bullish. We're going up. We're going up. We're going up." But if you're a smart trader and you actually know what you're talking about, right, you'll realize no, we have an hourly imbalance that has never been tapped into yet. So we probably just want to tap into it to make our continuation down. Now, which move would you rather catch, right? This move up or this big ass move down, right? Obviously, the move down, and you would catch that if you knew about the fair value gap. And this stuff happens on every time frame, guys. Fair value gaps are so useful. You have to incorporate them, right? Boom, right here. Guys, like this shit should just stand out to you, right? Fair value gap, right here on this big move up. And how do we know we're bullish? Because now we just inversed a bearish fair value gap. Notice that? Bearish fair value gap, inversion, pull back to a bullish fair value gap. Boom, boom, boom. Beautiful, 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 beautiful setups, guys. This stuff is not to trick you. This stuff does not like, yo, of course you have to realize what fair value gaps to pay attention to, right? Because there's quite a few, right? 1, 2, 3, 4, 5 fair value gaps, but most of them got filled. I mean, look, if you want a different entry, we have another fair value gap right here. Mark them out. This one got filled. You can catch this move up. You can catch this move up. Both of these opportunities presented itself because of a fair value gap. Guys, I'm telling you guys, look at this. Well, all the time, right? Fair value. Bottom of this candle, or top of this candle to the bottom of this candle is our fair value gap. What did we do? Price comes down. We stay in the fair value gap. We're chopping. We notice that we never close below it. So we're saying, we might be bullish. Then we wait for our break of structure. Boom. And then a pullback to another fair value gap. Obviously, we're on the high time frame. This would be on the lower time frame, right? But we could still see this applies. We break structure, create a new fair value. What do? Price comes back down right here, soars up. Guys, it's everywhere. Just open your eyes, it's everywhere. Price is so easy to read when you just know what to look for. So this is fair value gaps. This is how you can use them for entries. You could also use them for exits. So right, so let's use an example. Let's say let's use an example how we could use it for an exit. So what I just showed you was all entries, right? We see a sweep, a break, and then a fair value gap get filled. That's where we enter, right? And we can use this on all time frames, right? The higher time frames for our bias, the lower time frames for our entry, right? We want that sniper entry. But how can we use it to exit a position? Okay, we're obviously on the 15-minute, right? So I usually wouldn't even be in a trade for this long. This is like 3 hours, 2 hours. Like I'm not, but the concept applies on every time frame. Like I said, price is fractal. So let's say I'm in puts here. I'm catching this move down, right? Let's just say I entered somewhere around here. Boom. I found an entry, right? Somewhere right here. I'm targeting this low and I'm targeting all these other lows, right? You got to play offense and defense is what I tell my students, right? You got to play offense as in I'm in puts, I'm looking for bearish confluences, I'm looking for things to support my thesis and my bias, right? But you also want to play defense, right? What could fuck my plan up? What are confluences to the upside that I have to be cautious of to secure my profits and get out at a good time, right? We see a 15-minute fair value gap get created right here. Boom. Now let's say I'm in puts, right? Boom. My first take profit hits somewhere right here, let's say, and I have a couple runners. I have 2, 3 contracts left, whatever. I see a 15-minute inversion right here. We have a bearish fair value gap, and then this bullish candle closes above it, right? That's my inversion. That's telling me, hey, price is getting strong here, right? We're inversing 15-minute confluences, which is pretty high time frame, right? I would see that and I would get out. And then look, price continued from this high to soar higher and higher, create higher highs and higher highs. So this told me everything I needed to know about these movements because the inversion. And I saved myself. I mean, this is a $2, $3 move, right? I saved myself, especially with options, hella bread. You feel me? So always be looking out for them. You know what I'm saying? Always be looking out for them. Right? Happens all the time. Like I said, boom, right here. Let's look. I'm just calling shit out. I'm just calling shit out. We see a high. We see a high. Boom. Liquidity sweep. First thing I'm looking for. Liquidity sweep. I see a bullish to the upside fair value. Right? Let's mark it out. Boom. Fair value gap. Right here. Bullish fair value gap. I see an inversion. Okay, we swept liquidity, we inverse, telling us, okay, we took this money up here, we filled these orders. Now we're getting heavy selling pressure because we inversed buying confluences. Boom. Now let's look for some bearish confluences, right? We have a 5-minute bearish fair value gap, right? Boom, boom. Let's wait for this to get filled. This isn't my entry. This isn't my entry. This isn't my entry. And a lot of people get FOMO, right? A lot of people will get FOMO. Oh, I wanted this fair value gap to get filled, but we never filled it, and price is moving down. Let me just jump in right here, and then price will reverse, right? And then they're gonna see that they're actually fucked, right? They say, oh, we just broke structure underneath this low. We're going down even more. Nope. Price wants to balance itself out, and what do? We fill this fair value gap. Now this is your entry and you're catching this whole move, right? Instead of just guessing and gambling, right? And not only do we sweep liquidity on these relative equal highs, but we have fair value gap right here that we filled twice and then got moved down on. Guys, you can make a lot of money from these moves just by recognizing these fair value gaps. Like this stuff, like this is proof. I'm not making this shit up. This stuff really happens all the time. What does this wick do? Fill this fair value gap, leg down. It's just it just comes down to which ones to use. Now you may ask yourself, okay, which ones do I use, Dylan? You have to stack other confluences on top of each other for it to be more convicting, right? So I see this 4-hour fair value gap right here, right? This is the one I took my trade off of. I took this trade, right? I caught this downside move. Not only do I see we're in a fair value gap, but it's also equilibrium, right? And I haven't talked about this yet, but I'm going to. From this high to this low, this fair value gap is also in equilibrium, right? That's another way you could manage your fair value gaps and figure out, okay, this one's useful, this one's not, right? By stacking other confluences, which I'm going to explain on top of it. So, guys, that's fair value gaps, right? Once again, you could use them for upside and downside no matter what. You want to constantly mark out all fair value gaps. If you're bearish and your bias is to the downside, you don't want to just mark out bearish fair value gaps, because we could see an inversion of a bullish one and that'll tell you the same as a respection of a bearish one, or vice versa. This is going to make you guys so much money. Like, if just being able to recognize this shit and catch these moves, like, it's life changing money, guys. You just gotta study and identify it. Hop on the charts, mark out your fair value gaps, and look at price. When we return to one, how do we react? Do we inverse it? Do we respect it? And then what does it do? You have to study. You have to spend time in the market. You have to be experienced. The most experience I ever got and the most lessons I ever learned was not from YouTube. All right, it was from watching the charts. It was just from watching the charts. And I did this by myself. So now obviously you could watch YouTube and like simplify it. Like, I'm trying to simplify it for you, but nobody's doing that. Nobody's doing it like me. So I had to do it from the bottom. I had to do it by myself. So YouTube wasn't a huge help. Obviously, it led me on the right path, but I got way more knowledge from just watching the markets and just watching how it moves. But hopefully this taught you guys a little bit about fair value gaps. And last video was on liquidity, so we've covered liquidity and fair value gaps. I'm going in order of my strategy, guys. My strategy is liquidity sweep, a fair value gap, break of structure. I'm going to go over next. We're going to go over equilibrium, all of my confluences. But that is fair value gap. So hopefully you learned a little something. And yeah, I'm gonna see you in the next video. Appreciate you. It's Sunday. We about to kill it this week. I went undefeated last week in my Discord. Undefeated the past actually 8 or 9 trading days, right? So almost 2 weeks in a row. We're about to kill it this week. Let's check news real quick. What news we got? So we got tomorrow, the 30th, we have PMI at 9:45, and then Powell speaks at 1. So may not trade tomorrow, maybe choppy actions Monday, but we'll see. We'll see. If you're not in the Discord, it's lit. We got hella heads in the Discord. Everybody's learning, going crazy, and yeah. So definitely tap in and see you boys in there, man. I will see y'all, man. Peace.